looking at BTC USD. So 15-minute time frame, so it's super small. Slight twitch to the upside. Microstructure just points to probably the end of the selling and what would be called a rally. A rally is an upside move against the overall nature of the trend, which is bear, and this is where we're at on that. A little bit of gentle pullback after some key levels met, and I expect to see it push up higher than this level after breathing a little bit on the majors, but this is not super strong. So this is only, given the amount of selling that has gone on, this is actually quite a weak reaction, and even with a bit of a pushback higher up, we're going to probably channel, we probably bear flag, we could rising wedge, we could do a number of things, but this is typically not bottoming. In other words, there's your exhaustive low. You've not made rounded bottom at all, so it's not basing out with marginally lower lows. So this little pullback, I think, yep, you get another push up higher here, and then we get some form of structure. Could it go back to 8,000? Possible. As part of that, possible, but you've still got to keep in mind from whence we've come. So if we take it all the way back to the 10-day, in fact, let's do it on a different platform. This one will show you. This is very, very small, and we move back to the 8,000. Does not negate what is trend reversal event, a blow off and trend reversal event, and this is set up for potential continuation. So for those that think I'm only calling something down into the 2000s, that's not entirely accurate. I'm saying since we traded through what we call our 50% mark here, and we did so capitulatively, we could potentially have a H3 and an R3 in there. I'm not going to go into the detail for here on Freeview. There's a lot to go through for you to fully understand that. But the point is, even a small rally here to 8,000 could give you a perfect third impulse and set up the downside. So what that means is the potential exists. It wasn't broken. You might have remembered I said for that scenario, which I called scenario B, the sell-off down into the 2000s would be negated if we ran the 11/8s, which we weren't able to do, and we turned down and then went capitulatively. So you've got a grind line across the lows here, capturing all the lows, and that leaves the potential for a downside sell-off on the table, where this is a large macro downside. That doesn't mean it has to be a large macro downside. It just means a potential risk is left on the table. The gun is there with a round in the chamber. That doesn't mean you have to pick it up and shoot yourself through the head in it. It just means there is that risk lying there. It can be taken away later. It could also be first set up in a new trend. So there are other scenarios that exist, but we keep dipping so low on these sell-off legs that it biases the overall outlook for the market somewhat to the bearish side. How could we negate that? For all those that hate me for saying what I'm saying, what kind of price action would negate that possibility and get it swinging back to a bullish variety? So if you're a long-term holder in the currency and you're feeling pain in the asset class, what would you most need to see that would indicate impulsive, aka strong pumping moves up here, a nice high third high, quite close to this, and then a very mild drift down if you follow my cursor. So if I was drawing lines for you, that would be it, but it would be quite a change in structure to what it's been doing so far. So you'd need impulsive and then mild, quite high up, and then a mild drift down, and then we could argue that is going to turn into a continuation upside with the volatility squeeze. That goes hand in hand with that, but at the moment these down legs are actually slightly steeper than the up ones, and the impulsiveness of these up legs, you know, you had your little pop there, and then from there it was very, very weak. We were drawing a lot of rising wedges on the way up. We got a last gasp HVF that failed to make the 10,000. We balked at the 10,000 and came back down. We thought, okay, are you still going up? Will you make the 10,000? We'll treat you if you would. We traded BCH, thankfully, which did, and this one didn't. We then shorted BCH, and Bitcoin went down, and they all went down. This was a nasty little sell-off, guys. Nasty little sell-off. Great to be short, which we were, and we made some good money on that on Ripple this time, shorting Ripple. So now you're here, and as you can see, this is very low vol, very low vol, very small, what we can get, a little bit of a push up, and then going very quiet. Eventually, actually, super low volatility could become bullish if we get a nice push up. But if it stays low vol and stays flat bottomed along these levels here, the chances the next expansion could also be bias down. So I'm not giving you a prediction. I'm just telling you all the probabilities and saying that one of the most dangerous ones still remains probably in the driving seat, aka it's 55% more likely than the bullish scenario is, given the two potential outcomes. But that can change as price behavior changes. If we get super perky and pump a little bit, you get where I'm taking you. So the same on the short time frame rallying. We got a little micro HVF there. People that were trading very low time frames could trade that. Probably going to get a nice little impulsive move up to around 617. I'm not interested. BCH, you're getting falling wedge with a move out the falling wedge, and you had that little squeeze there and a little push up. So there's little green shoots of a rally type recovery without being overly convincing. There you have Ripple as well, that had a nice squeeze here, slightly imperfect, and then moved up out of its rising wedge. And a nice pump, and then falling wedge here, and is pushing up. So we've taken our profits there, in spite of the possibility that it still has time to go lower. I don't want to sit through rallies, so we closed that out some time ago, which was good. We'll see how it performs from here, but these are all short time frame fellas. If you look in the bigger view, let's take the Ripple. This is a long way from a bull and still has this structure, and could be, if it starts getting towards the funnel levels that I've drawn here, I'll pick up fresh shorts on this, especially if this is in a channel weak rally. Like it may well be. So that's the nature of the game, and that's where we're at, and those are our views. Enjoy your weekend. Come on, the Red Men. That's Liverpool Football Club tonight. Speak to you all soon. And by the way, the webinar Playing Great Defense, themarketsniper.com. Register. It's not for everybody.